Hi, I'm Alex Perez. In this video, we're continuing to talk about tax traps for the foreign investor. Specifically, we're talking about the federal income tax consequences of investing in or doing business in the United States. Remember, the key question is whether or not you are considered a U.S. tax resident. If you are considered a U.S. tax resident, as we mentioned in a previous video, then you are subject to tax in the United States on your worldwide income. What does that mean? It's a very important phrase. It means that whatever income you receive from whatever country, you must include that income on your U.S. federal income tax return. There are other really important obligations that go with U.S. tax residency. For instance, foreign bank account reporting is an important topic that has been cracked down upon by the Internal Revenue Service. Informing the Internal Revenue Service of foreign companies that you may be a shareholder of is also an important informational reporting requirement. There are many obligations that will apply to you if you are a U.S. income tax resident. If you are not considered a U.S. tax resident, then you may not be subject to tax on your worldwide income, but you still may have United States federal tax obligations. It just depends on the type of investment or the type of business that you're conducting in the United States. For instance, if you receive payments of interest or dividends, those very well may be subject to tax in the United States. If you are a member of a partnership in the United States, you may be subject to tax in the United States on income generated by that partnership. The point here is that you should constantly monitor your U.S. tax residency status, which, by the way, is different than your immigration status. Remember that, because your U.S. tax residency status will determine how you are taxed in the United States on your investments and your businesses.